I just wanted to share some things that I'm sure a lot of people will find some great benefit in. It's relating to specifically for the 950 macro, but I'm sure you'll see the same exact thing happen in all of the macros. And it revolves around price delivery. Now, this is something that a lot of people don't talk about. This is obviously just the basis of ICT concepts. There's 4 stages of price delivery. Okay, so there's 4 stages, and it's consolidation. We'll put as, actually, I'll just write consolidation. Then you have expansion. Now, just stick with me here. This is going somewhere. Then you have reversal and retracement. Okay. So these are the 4 stages that price will be in. This is the only 4. Okay. So price will either be in one of these stages, and there's a rhythm that price can go to. So first, everything starts with consolidation. Everything starts with consolidation. Okay. Then from consolidation, let me move this down. There we go. Everything starts with consolidation. Then moving that past that, you have expansion. So this is the only thing that it can go to from consolidation. It always goes to expansion. So from consolidation, it always goes to expansion. By the way, excuse the perfect handwriting here. I'm using my mouse. Then from expansion, you have 2 options. Okay, let me go back to the notes here. You have 2 options. You either have a reversal. I'll just annotate these. Reversal, or you have a retracement. Then from there, there's 3 options. So this goes back. There's 3 options. You either have another expansion leg, a reversal leg, or retracement leg. So these 3, okay, you'll have any combination of this in here. Then from there, goes back to consolidation. Now I'll post a screenshot. If you go to the notes, let me send a screenshot, and it's definitely better than my handwriting. Here, let me do this. So this is what it looks like. This is something that Infinity Trading posted. Here's his Twitter handle, so this is not my picture, but this is a great resource. I'll post it in the notes as well, so you can use this. So these are the only stages of price delivery. Okay. Once you understand this, you can apply what you already know about the macros and about specific time elements. So either you're using the macros or silver bullet, anything like that, and you apply what this previous stage was, and based on what the previous stage was, your entry will be based on what happens next. So I'll give examples of this, but if you're in consolidation, the only thing you can get is an expansion. So based on your time element, if you see consolidation prior to, so say we're going to use the 950 macro for this example. If you see consolidation around 930, what are you going to expect? You're going to expect an expansion move out of the consolidation, and you'll get an entry with the 950 macro using the expansion leg. Does that make sense? So with any model, any ICT model, there's only these many variations. There's only 4 variations of the model. Now this is what the 2022 model basically was, just a reversal model. So reversal is a hunt on stops and a return back into the other side of liquidity. So if you have a reversal condition and you sweep the sell stops, you're going to be looking for the buy stops. So the 2022 model was strictly just a reversal model. Okay. You can also use this as your unicorn model. Make sense? Now your expansion model, what is that? Your expansion and your retracement model is basically just your silver bullet. Okay. So all of these models, there's only 4 stages, but all these models are either a specific section of price delivery, or it'll be a specific section in time where any of these 4 can happen. So that's what macros are. Macros are a specific 20-minute interval where any of these 4 will give an opportunity to enter. So we'll switch over to, this is the backtesting. Okay. So let me zoom this in. So you basically, so I'm going to use strictly the 950 macro for this. Prior to the 950 macro, so keep that screenshot up on another screen or just in front of you if you can. I'll just remind you what it is. But based on what prior to the 950 macro is, you'll have a specific entry every single time based on what it does. So if you have a reversal, I'll list it off quickly. I'll put it up on the screen. Actually, we'll go back to next. Never mind. I'll put it up on the screen when this is edited and published. But if you want to write this down, so if you have a reversal at or near 9:30 or 10 a.m., you can expect a retracement entry. Now, what is a retracement entry? Retracement is just a return back into a fair value gap, and you use that as your entry. If you have expansion near or at 10 a.m. or the 9:30 opening, you use another retracement entry into a fair value gap. If you have consolidation around 9:30, what do you expect after consolidation? Expansion, right? There's the only one thing after consolidation, expansion. So if you have consolidation at or near 9:30 or near 10 a.m., you'll have an expansion entry. So you can either use an order block or a fair value gap, or you can use an order block with a fair value gap, or any of the two, okay? Now, retracement prior to 950 macro means typically there's news at 10 a.m. So that's where you'll have a rough, choppy kind of low probability 950 macro. And typically if you have a retracement during that time window, and that's the stage of delivery we're in, you'll see a 1030 sweet spot that occurs. So I'll show examples. So here we have 950 macro shaded in blue here, okay? What do we have prior to the 950 macro? We have London session low down here, swept out. So that's a reversal condition. You can see that market structure shift also confirmed the reversal with displacement. So this is what the 2022 model teaches, right? So reversal prior to 950 macro confirmed by the breaker in here, as well as the market structure shift. So if we have a reversal at or near 10 a.m., we expect a retracement entry, okay? So you have your breaker, which is your unicorn setup technically, and you have your fair value gap in here, as well as in here. Retrace at 950, run up towards short-term buy side, and I'm sure, I think, if my, yeah, September 22nd. So I think we do ran out this buy side. Obviously the screenshot is poor, but we do run up the buy side eventually. So 20 points from there, obviously, but there's your retracement entry. Going to the next picture. We have consolidation at 9:30. See how this is pretty clear consolidation, right? Defined high and low. So this is where they're building liquidity. What follows consolidation? You always have expansion. So here's your expansion move out. So if you have consolidation, you use your expansion entry. Here's your expansion entry right here. We have clear fair value gap, expansion entry right here. This is on ES, by the way, so the 11 points is technically double of your target. Retrace back into the fair value gap, that's your entry short, targeting sell side liquidity. Makes sense? And then here's your reversal down at 10 a.m. Next one here. So this is a example of a low probability macro, okay? Low probability macro is typically a retracement stage of delivery during or prior to the 950 macro. So you can see here we have clear consolidation, and this giant wick here, this is also ES, this giant wick here is at 10 a.m. It's kind of blocked by these annotations, but this giant wick is 10 a.m. And what are we doing prior to the 950 macro? We're tracing up into a fair value gap. Excuse me, holy voice crack. We're tracing up into a fair value gap here. Okay, then we displace away, leave the consolidation. So if you look at a higher time frame, all of this in here is all consolidation, right? Defined high and low range that we're stuck in. What happens when we leave it? Leave consolidation, what do you expect? Expansion. Expansion lower, you can see, what time is this? 10:30. You get a retracement back into the order block. If you switch to a higher time frame, you'll see an order block in here. Return back into the order block. And then we sell off going further into the AM session. Okay, so this is your low probability macro, would be your retracement stage of delivery. Your reversal stage of delivery is good for the 950 macro. Expansion delivery is good. Your consolidation delivery is good. Your retracement delivery is when you have to wait for the news driver to release, okay? This is literally just, this will go over people's heads, but this is literally just how you trade the 950 macro. It's just like this. There's only 4 variations, and one of them is low probability. So there's 3 variations technically, up and down, okay? Here you go. What is this? Prior to 950 macro, we have consolidation. Let me just make sure. Okay, everyone can see. Consolidation right in here, 9:30 to 9:45 roughly, right? Consolidation. You can see the clear high and low. We also ran out the buy stops. So we have consolidation and a reversal technically. What do you expect? You expect expansion away from the consolidation. Also, this is your reversal point, right? So your market structure shift, technically also reversal since we ran out buy stops. We retrace into the expansion leg from the consolidation. You saw short there. Since it also is a reversal, since we ran out the buy stops, confirm the market structure shift, what do you target? You target the sell stops. 2022 model, right? You target the sell stops if you have a reversal. So if you have a reversal at or near 10 a.m., you expect a retracement entry. Targeting the sell stops, okay? This is also ES, the US 500. It's an old screenshot, but you can see what is the entry here? 38.40 down to 38.20 basically. 20 points on ES. That's a lot. You know, your minimum is 5 points. Here we go. So here you have consolidation technically. Return into your expansion leg out of the consolidation, and you return into what is this? This is a retracement entry. But you also can see we have news at 10 a.m. So we have a run on buy stops technically. You run on buy stops. Reversal since DXY is up here. So this is your low probability kind of macro. We have news at 10 a.m. You can see by this large wick at 10, right? What do? When there's a retracement, you wait for the next stage. So you wait for after the news is released. So news released here, confirmed by the market structure shift below this low. We have a reversal since we swept out buy side, I'm sure. Somewhere up here, you can see this line as well. This buy side liquidity being ran out. News at 10 a.m. You confirm the reversal. With the reversal, you expect a retracement entry. Retracement entry right there. Boom. Also lines up with the order block. Sell short there. Target sell side liquidity. I'm sure this ran out all like later into the trade. This is also an ES. So if you took this, was it 406 down to 401, 4001? So 5 points, probably like 8 points down. It's a poor screenshot, but okay, I'm not even gonna try and look at this, but I don't even know what market this is. Okay, we'll just skip this screenshot for now. Here you go. So news again at 10 a.m. here. So it is a low probability kind of thing. So you're gonna wait for after the news. But reversal up to here, right? What do you expect after reversal? You expect a confirmation of the reversal. So whenever you see a reversal, you want to wait for the confirmation. You don't want to just expect, okay, this is a turtle soup entry, right? You're not going to take a turtle soup entry. A turtle soup is just a run on the stops, and you use that as your entry point. That's probably the most difficult entry there is. Instead, you wait for the confirmation of the reversal, retracement back up into the fair value gap. You could use that to sell short. Obviously, with the news at 10 a.m., you want to preferably wait till after the news, but you can see we're in a retracement stage, expansion lower, taking out the sell side. You can also see there's an entry point here at 10:02, I think this is. You can sell short there, targeting the sell side. You can see 2 candles smacked right through. But that was an indication of a low probability setup, right? So this is something you probably would avoid since we do have news at 10 a.m. Here, what do we have? We have clear. We're tracing into a fair value gap, right? So whenever we're in a retracement stage, it becomes slightly lower probability and harder to predict. But even here, we're in a retracement stage, filling this fair value gap prior to 950. But we do have a reclaimed fair value gap down here. We use that, propel up into the buy side. Okay. Poor screenshot. We'll skip it. What do you have down here? Smart money reversal at the low, right? Reversal point, you're expecting a retracement entry. Here's your expansion up, retracement entry, stop and be below the low. Got some heat on this, and then we expand it up. This is not even news, this is just delivery here. You can see 10-10, right at the macro close, smacked all through all the buy side. Here, what do we have? We have expansion at prior to the 950 macro, right? So if we have expansion, you want a retracement entry. Expansion, here's your retracement fair value gap, left unfilled, right? So we have a fill of this gap prior to the macro. So you're looking for the unfilled fair value gap. Dip down lower into the unfilled fair value gap right there. and then you can target the buy side up here as well as the 20 points. You can see what is it, 9, 1, 2, 2, 4, 5. You look for 1, 2, 2, 6, 5. So easy 20 points right there. There's no time on this, so we'll skip that. Here's another example where you have a poor signature because you have news at 10 a.m. Okay, so you're in a retracement stage. You wait for after the news. I'm sure this, I don't know what day this is, so it almost looks like it's on ES. So I'm assuming this is also a low probability day. You can see by how many wicks we have up and down. So this is the kind of day you want to avoid. Here, what do you have? 9:30 opening, expansion lower into a what? Reversal. You have a sweep of sell stops. This is also the 3-minute chart, so it's good to point that out. Reversal at the low. You have an entry here. So if you have a reversal, you're looking for a retracement entry. So I'm sure if you were to draw, if you dropped down to a 1, you would see the inversion fair value gap broken through. You can see it even here. We closed above it. Tap back into the inversion fair value gap in the bisi. There's your retracement entry. Trying to find a good consolidation. Here is, here, perfect. So what do you see here? You have clear consolidation at 9:30. Consolidation in here, right? 9:30 news driver, or 9:30 equities open, not a lot of displacement out of this range. So consolidation. What do you expect after consolidation? What's the only thing? Expansion, right? So out of the consolidation, you're expecting expansion. Here's your expansion right here, out of consolidation. So if you have consolidation, you're looking for your expansion entry. Okay, now this is something that ICT teaches a lot in his core content videos in 2016, but basically what you want to do is you want to measure out your consolidation high to low, drop a fib. So I would drop a fib on this high to this low. Drop a fib on that. You measure it out. You want to look for a retracement back into 50%. So if I, there's a screenshot. I'll put it up in notes as well. I'll share it. I'll put it up on the screen for the recording as well. So this is what I'm looking at. Go to the notes and you'll see what I'm talking about. That right there. So you have consolidation, and you want to see return of 50% of the consolidation range, as well as the order block, the last down closing candle in this scenario before the move up. So when people look at order blocks and it's like, oh, the last down closing candle, this is what you're looking at. You're looking at the consolidation range. Okay, you're looking at the consolidation range. What's the last down closing candle, preferably that intersects with the 50%. Okay, so if you measure high to low here, draw that on time. Here's your order block, right? This is your last down closing candle before the move up, for the expansion leg. So we have consolidation. You want to see an expansion entry for the 950 macro. What do you see here? We see the expansion entry, which is the tap into the order block. Now this is prior to 950, but you can see these wicks are tapping into what? Into the order block. They're just tapping into it. So this is where you would go long. Now there's a sibi here, but since you're expecting consolidation, you're expecting the expansion entry type, you want to see this traded through. So you could use the order block as your entry here, or even here. After we close past the inversion, what do? You come back and tap into the inversion gap and close back bullishly. So you could be a buyer there. You could be a buyer here after you see the close and tap back into here. You can see you're only looking for 5 points. That's roughly at 39.10. You only need 39.15. What do? Retrace back all the way up into the 15-minute fair value gap, as well as, more importantly, above the buy side liquidity here. Okay. Make sense? So consolidation, you're looking for the expansion entry. Here's another example of low probability, right? So you have news at 10 a.m. With this candle here, you can see it's larger than the other two, so this is probably a news driver. What kind of stage are you in prior to 950 or around 950? You're in a retracement stage. You have this 5-minute fair value gap that I've outlined. Obviously, you can't see it on the one, but 5-minute fair value gap. We're retracing into that fair value gap, okay? So you're expecting, what are you expecting? You're expecting a expansion away from that retracement. You can see news driver up to here. Now, what do you do when there's a 10 a.m. news driver? You wait for after the news driver, right? So what stage of delivery are we in now? We just ran out buy stops. So that's indication of what? It's indication of a reversal stage of delivery. We reverse off of the high. Now what are you looking for a confirmation of reversal? you're looking for disrespect of PD arrays or a market structure shift. Okay, does that make sense? What do you have here? Swing low, boom, broke it with displacement. That's the first confirmation of a smart money reversal. So a reversal type of stage of delivery. Okay, so that's your first indication. Second indication, you have a large bisi here. Continuous closures below. We close below it right here. Okay, you're waiting for after 10 a.m. for your entry point. What do we do here? What is this? Retracement back into the inversion fair value gap, so we draw that out in time. That's when you can be a short seller, targeting sell side. And it's off the screen, but there's probably a swing low down here. Boom, all the way down. So, news driver, you're expecting the retracement stage of delivery. So what did we see here? Retracement stage of delivery into a fair value gap. Then you see the reversal stage of delivery. After the reversal stage of delivery, let's go back to the notes. After reversal, you either have an expansion, you have any combination. You have an expansion, reversal, or retracement. So you have a reversal, so you're expecting expansion, retracement into the inversion fair value gap, another expansion leg, right? And this, if you were to drop drop higher into a 3-minute or 5-minute, this is all just one expansion leg, okay? And you could even see this as consolidation on a higher time frame, right? This is all this chopping up and down. If you look at this is all just consolidation. What do you expect after consolidation? Expansion. Here's your tap back into the order block. I'm sure on the higher time frame you can probably see a retracement somewhere on the right side of the screen. Okay, so it's all fractal. You have to look. So whenever you see wicks up and down, today was a great example of that. I'll pull that. Someone remind me after we're done looking at these examples. Just remind me to switch over to TradingView, and I'll show exactly what happened on the stream. It's clear. Okay, so or actually I'll just put that in the chat. Let's go to current day price action. Okay, what do you have in here? You have, what stage of delivery are we in? We just ran out sell stops. What is the evidence of? Evidence of a reversal stage of delivery, right? Now what do you look for? You look for a market structure shift, disrespect of PD arrays. In this case, there is a breaker, okay? 950, you have trading back up past the reversal. So if you have a reversal type, let's see what that is. You're expecting a retracement entry. Boom. Right into the fair value gap, slightly past the breaker. That's your unicorn setup long. What are you targeting with the reversals? Opposite side liquidity. Boom, quickly ran up to the buy side. Here's an example. We have expansion leg prior to the, or expansion leg here technically. I think is there news here? It's on ES. It must just be a choppy day. It's on Monday. Okay, so another example of a Monday price action. But expansion leg, what are you expecting? A retracement entry. Here's your retracement entry. A lot of chop, kind of displaced after the macro time. So this is why you also don't want to trade Mondays. But there you go. Retracement entry after expansion leg. What do we have here? Expansion leg. Expansion leg. So what are you looking for? Expansion leg, retracement entry. Here's your fair value gap. It's left unfilled. Go along in there. Target short-term buy side. You can see the 8 points as well. There's probably some buy side on the left side of the chart. Dragged it over, ran up into it. Okay. You can also see the reversal up here, confirmed by the market structure shift. Reversal, what type is that? Retracement entry. Tap into the inversion fair value gap right there. Right, there's also a breaker in here. Tap into the breaker right there. So there's a lot of things in paired up, right? Another news driver right up in here. So you're expecting what kind of price action? You're expecting a retracement type of price action. So retracement price action, there's probably a fair value gap we dipped into right here. Started trading upwards. News driver, pop this up past the buy side. What is this? Reversal, right? Reversal. Now there's no clear indication here. We did kind of close below. We closed below here, so it's your inversion fair value gap as the bisi switches to sibi. You also have a sibi in here. So you could short sell up here. Stop above the high. That's riskier in my opinion. Or you could just wait. If you look at if you look at a higher time frame, this is all consolidation in here. Trade back lower. Look at the sweet spot in here, 1030, 1045. What do we do? That's your expansion leg after consolidation. So you're looking for, so consolidation in here, you're expecting what? Expansion. Expansion entry back into the, if you switch to the higher time frame, you'll see an order block in there, as well as the fair value gap it retraced into, and we dip lower. Here, what do you have? Consolidation. Expecting what? Expansion. Now this is a late entry, but we do start to get out of the expansion here, tap back into the fair value gap, and then we dip lower. This is also a rough day. I'm assuming this is either a Monday or you can, I don't know what April 26th was. I'm assuming there might have also been a misaligned indices in here as well. So some sort of low probability condition. Since you technically don't have, you have consolidation, you want to wait for expansion. So if you were to measure this out, either this would be your entry point, this is past the macro time. I'm not sure if there's news in here too. It's kind of rough to see. Here, what do you have? Expansion leg, right? After you probably ran out buy stops on NASDAQ, reversal. There's your retracement entry. Boom. Here, what do you have? Assuming there's buy stops over here, not annotated, but we have a reversal pattern. Reversal, you're expecting retracement, retracement entry into there, seeking sell stops with the reversal in mind. So whenever you have a reversal, you want to seek the opposite side liquidity. Okay. Retracement, you're expecting a return into 50% of the dealing range. Okay, so whenever you're expecting a retracement, or we're in a retracement stage of delivery, you'll see a retracement into 50%. So here's an example, right? Dealing range, high to low. Past, so we go into premium there. That's where you can be short seller. Okay. Here's an example. You have consolidation prior to 9:30. 9:30 news driver creates expansion. You have expansion leg. Okay. What are you expecting? You're expecting a expansion entry type. So you have a order block in here you return to, as well as the fair value gap lined up. This goes on and on and on, right? So you have here 9:30 salsa liquidity pulling up, as well as the consolidation. So consolidation all in here technically, right? All in there. You can see this as a Judas swing or a sweep of sell stops, reversal, whatever you have. Then what do? Start trading back upwards. Okay. Right in here, you have consolidation. What do you expect? Expansion. Expansion up. Trade it back into the order block around 50%. So if you switch to a higher time frame, this will be cleaner. But you'll see the order block retracement down to there, as well as the fair value gap in here, reclaim fair value gap, as well as if you wanted to take the later entry. So this is at 9:50 right here. You could be a buyer with the order block, or you could wait for the expansion. You can see the retracement entry. So retracement is a fair value gap. Draw that on time. Entered long in here. You can see then target the buy side. Okay. Now this goes on and on and on. Okay, you can do your own back testing. This is literally the same exact stuff. Look, probably sell side liquidity here, consolidation in here, expansion. What are you expecting? A retracement entry. Boom, boom. Right? This repeats over. There's only 4 stages of delivery. This repeats over and over and over. But this goes over people's heads. So let me close this out. We'll go to TradingView today. Now today is a great example. Let's open this up. Let me switch the stream really quick. Everyone see this, I hope? Good? Looks good to me. Okay. Let me clear some of this out. We'll go back. Okay. So if you look at the 1 minute, what do we have in here? Expansion leg, you could use that retracement into the, so we do have an order block in here. So let's go to 5. Where's today? Here we go. Consolidation in here, right? Okay. We have displacement lower, sweeping out sell side on ES as well as on Q. See expansion, you want to see a retracement entry. Here's your order block in here. Tapped into it perfectly. Boom, boom. Accelerates up. Okay. Now what do you see in here? So you see expansion, follows what? Retracement. Then you go into consolidation. Okay. So this is all consolidation here. If you're looking at the 1 minute, it's difficult to see, right? This kind of, you can see the slight price action up and down, but still chopping around here. So whenever you see this kind of price action, you want to stay on the time frame that the consolidation happens, okay? Does that make sense? So you stay in the consolidation that stay on the time frame that the consolidation is occurring. So in 3 minutes, very clear. This is consolidation, right? From high to low. Now what do you see? Okay, you measure this out. Whoops. After consolidation, what stage of price delivery is after consolidation? Same exact one. Expansion, right? You have your order block in here. That's roughly in line with 50%. See expansion away. Expansion, what are you expecting? A retracement entry type or your expansion entry type. So expansion entry type would just be the order block, and then the retracement entry type would just be the fair value gap. Okay, so you have both in here. Perfect respect of that fair value gap low into, I think it might be actually order block. So if you measure the order block, it's almost perfect. Right at the equilibrium, mean threshold of it. Close bullishly. You could be a buyer here with this candle. If you wanted confirmation that we're still bullish, you could buy here with this dip. Targeting what? Targeting the AM session high as well as the London session high. So that's that London open right there, 5 a.m. And then you could also measure your standard deviations. So let me clear this up for the chart really quick. We'll keep the order block there. You can measure your standard deviations. What price point is that? One tick short of negative 1.5 standard deviations away. Okay. Now I use the 1. This is 1 standard deviation. Obviously you'd be targeting the 2, then etc. But targeting the 1 above the buy side liquidity, you can see right here. So clear expansion in here, right? Return back into the order block after we left the fair value gap. So whenever you have consolidation, you want to look for fair value gaps. Can't speak. FVGs to form. Okay. So you have your expansion leg, or you have your consolidation in here on the 3 minute. Expansion leg out. What are you expecting with expansion? You're expecting expansion entry. So back into 50% of the consolidation range. You can be a buyer there. Okay. As well as the fair value gap in here on the 1 minute. Okay. You can see the perfect respect of that as well. Candle closure bullishly. Good indication. We run up. Now, since we're in expansion, you want to see, this is another indication that you're in an expansion leg. Expansion legs will have every single PD array respected, okay? So whenever you have every single PD array respected, you want to see, so here's your fair value gap in here, boom, closing above 50% of it as we return into the London swing high as well as the target that we had. So candle buys bullishly up to 1 standard deviation. Pop right through that. Here's a reversal. What do you expect after reversal? Expect expansion. Retracement entry right there, as well as the old selling you can see, right? So whenever you have a market maker sell model, if you're expecting a reversal point, so here's your reversal point, we closed through this gap, okay, broke market structure right here. Here's your old selling, here's your order block, right? Consecutive down closing candles. Once you close below here, look at that. No candle buys are closing above there, as well as the fair value gap. So this is where you can expect breakaways. This is something Market Maker Turbo taught me. This is a great indication of how strong or weak price is. Okay, so you have old selling in here, old selling in here as well, right? So reversal, retracement entry with in tandem with this. Draw that on time. You have old selling in here. Another respect. Look at the candle buys. Once you close below, we don't see a single candle body closing past it. Then we dip into the sell side. All these relative equal lows building up. Make sense? Also within what? Dealing range discount. So let me clear this up. You can see what I mean. So dealing range discount right here. Okay. So you have reverse. So you have consolidation. Make sense? So yeah, I'll just label it. You have consolidation. What do you expect after consolidation? Expansion. Okay. Here's your expansion out. You get your expansion entry right in here. What is this within? Macro time. Magically. Expansion move. Here's your expansion entry. Right in there. Then you have two options. You have a retracement or reversal. Expansion leg up. Here's your reversal point above London swing high. Then after reversal, you can either have expansion or retracement. Here's your expansion. Okay. Make sense? Expansion where? Into the sell side liquidity, as well as dealing range discount. Okay. So you could see this as a retracement. So reversal into a retracement, back into 50%. Now what do you see? Consolidation. Okay, during lunch. Rest of the day, more or less consolidation, right? Here's an example here. You have your consolidation in here. Measure high to low. You have your last consecutive up closing candles. Here's your bullish PD array. Bullish order block, and your expansion entry type. Makes sense? So if you drop to 3 minute, make sense? Is your tap of the order block. Okay, so this is all fractal. So if you see consolidation, you switch time frames, and if you see a specific stage of price, you can expect the next stage of price. And depending on what stage we're in, specifically for the 950 macro, you can see different entry points. So reversal at or near 10 a.m., you'll get a retracement entry into a fair value gap or an inversion. Expansion at or near 10 a.m., you get a retracement entry. Consolidation, what do you expect? Expansion entry into the order block or the fair value gap. Okay. Then in retracement, if you have a retracement stage of delivery, you most likely have news at 10 a.m. Okay. So we're in a retracement stage of delivery prior to the 950 macro, and you have news at 10 a.m. Okay, popping up through there. Now I suggest you do your own backtesting and study this yourself, but this is what I'll probably use going forward as the four entry types. One of them being low probability, the other three higher probability. And you could use this throughout the day, okay? Now this applies to the weekly time frame, this applies to the daily time frame, this applies to kill zones, this applies to macros, this applies to silver bullet. Okay, every single model that ICT has given us is based around these four. Okay, you have the Unicorn 2022 based on reversals. You have Silver Bullet based around basically expansion away from consolidation. Silver Bullet is more of like a general thing. You can have all four of stages of delivery. But in between that, it's just noise. Okay, so you want to have a time-based model where you can look for these signatures in price and execute based off of them. This is where backtesting comes in. So you want to find where the low probability stuff happens. So for 950 macro, that's when the 10 a.m. news driver is there. You want to wait for after the news. Okay, so this is an example of where price was very, very tough to read today. But if you have this in mind, 10 a.m. news driver, retracement entry. So if you're anticipating a retracement with a 950, you could use that as your entry point long, or the silver bullet, or the not silver bullet, inversion sibi. Okay, closed above it, tapped into it, respecting bodies of the candles, respecting there. You could use that as your entry point. That's definitely riskier, but as well as tapping into the order block here from the original consolidation. Makes sense. So a lot of things pointing to the upside, as well as expansion away from the consolidation with the reversal, targeting the buy side up here. Okay, but if you wanted to, you just wait for us to get out of the range, right? Here's another example. price being fractal. Okay. Expansion, reversal above the buy side, short-term buy side right here. Here's your PD array in form of a sibi. Close below it, tapped into it. Fair value gap in here as well. Shorting opportunity. What do you expect after reversal? Expect expansion, okay? As well as there's no retracement back into 50% of the dealing range. Into this fair value gap, okay? Retracement entry, target 20 points, smack through right there. And then we have consolidation. Then you switch to the higher time frame. Makes sense? So I'll record this. I have been recording this at least. And I'll upload it to YouTube. Okay, so you can go back and watch this. This will most likely be, you'll refer back to this video. I suggest you go watch the premium core content that ICT posted. He explains this in great depth, but applying it to a model is where you'll really succeed with the concepts. So if you have any questions, you can DM them to me or put them up in the Q&A post. If you're in tier 2, it's a successful model is the title there. So I'll probably do more backtesting. We'll probably have more sessions like this where we can live tape read the different types of the price delivery stages. Maybe do one tonight if there's some interest. But until then, stay safe, and I will catch you guys later today or tomorrow. Peace.